Going to get started with Michael introducing himself. Go for it, Mike.
Good afternoon, and thank you for joining us today. My name is Michael Young, and I'm the Senior Lending Officer here at Federal Home Loan Bank, Topeka. The most important thing I want you to know about me is I am very passionate about our purpose, to be your trusted financial partner and your reliable source of funding. I'm honored to be joining Kylie today because identifying eligible collateral helps you maximize the value of your membership, and it also helps you develop a robust liquidity and funding plan. Kylie?
Nice. Thank you, Michael. I should have gone first because it's hard to follow, so thank you. Hi, everybody. I am Kylie Mergen. I'm the Director of Financial Services. Thank you for joining us today. I started with the bank back in 2007. I might have even traveled to see a few of you performing collateral verifications, and then I've managed that team for a long time now. And in 2017, we blended the collateral operations and safekeeping function under one financial services umbrella. So that now includes collateral review, collateral operations, and safekeeping. So all things collateral is me. Okay.
All right. Yeah. Today, our goals are to expand your knowledge on collateral asset availability so you can further monetize on your assets to improve profitability. We'd also want to share tips and tools available to help you analyze your current and future collateral needs, and provide reasons why it's beneficial to expand your current collateral capacity to ensure you are prepared for those unexpected events. I think we witnessed that in 2020. So,
and how we're going to do that is we're going to talk about what is eligible collateral, the different collateral types that we offer, the reasons sometimes why collateral is overlooked, and then we're going to walk through some strategies and resources that we have available. And at the end, we're going to have a question and answer session. And I should highlight that we do have you all on mute, which is just for everyone's enjoyment of the webinar. But the chat and Q&A function are available. So if you have questions that arise during the webinar, certainly use those functions. And Susan and Jesse are monitoring those for us, so they'll interject with questions as we go, or we will get to them at the end. So first, we're going to start with just what is eligible collateral. And to us, eligible collateral are those assets that are pledged by our members that secure your outstanding credit obligations, that comply with our underwriting requirements. And those are published in our Member Products and Services Guide, specifically the Schedule of Eligible Collateral. So collateral is sort of this giant umbrella collateral pool that you have available to use for your funding needs. Different types that we have cash and FHLBank CDs. A lot of members forget that we do accept cash and CDs as collateral. The cash does need to be on deposit in your overnight account here with us, and the CD does have to be issued by the bank, but they are available for use as collateral. The benefits of using that, number one, it's super quick, very, very quick. It happens as soon as you fill out a pledge form. And then the second part of that is you do receive 100% lending value for cash and CDs, so there's no haircut at all. And then, go ahead, Michael.
No, and I think some people are probably thinking, why would I pledge cash or CDs? And with the enormous amount of liquidity we've seen this year, a few members have come in and pledged cash to support collateralize the letter of credit that's used to collateralize their public unit deposits. So it's been a great tool or great way to hurriedly pledge and increase your collateral capacity so you have that availability to use that letter of credit through your public unit deposits.
Mm-hmm. Yeah. We also accept securities, so agency securities, CMOs, some PLMBS. We do have a wide variety of eligible security options for our members. The securities must be safe kept at Federal Home Loan Bank or an approved third-party custodian. Again, the pros of pledging securities is they do have a higher lending value. And they also can, relatively speaking, be pledged very, very quickly. So, as long as we determine that the CUSIP is eligible and it is held at Federal Home Loan Bank or the third-party custodian within a couple of forms being assigned and completed, that asset can be pledged really quickly.
And some of the, when we see members pledge securities as collateral, there's a variety of reasons. But members will pledge cash and securities to take advantage of periodic advance specials we'll offer. And it's just easy, quick, and it also has the least haircut and gives you the most lending value. In other words, cash and securities are just additional options to avoid a collateral shortfall. Kylie might get, and I go back and forth on this, but when I'm speaking to certain types of members, mainly credit unions and banks, I often refer to cash and securities as contingency collateral.
Yes. And I want all the collateral all the time, right? Like that's my thing. So, yeah, Michael and I do differ a little bit on that, but Michael certainly knows a lot more about how to maximize your balance sheet. And then we get to loans. And loans are the most common collateral assets that are pledged to us. I'm going to show that here in just a moment. They are pledged to us via the QCD form, qualifying collateral determination, which is why we shorten it to QCD. So via the QCD form quarterly, or we do have some members who are required to deliver their assets to us. So either way, we do accept them and provide lending value on those assets. The pros to pledging loan collateral essentially is that you're taking an illiquid asset on your balance sheet and getting liquidity for it. And that's just the short of it for me from a collateral perspective.
Yeah, so that's spot on. Why not monetize on your already earning assets, right? So.
Excellent. So we thought it was a good idea to just show you what is currently pledged to the bank. So total collateral pledge, we have unpaid principal balance of $123 billion pledged to us. That equals a lending value of $94 billion. You can see the majority of that is made up in loans. So $78.4 billion of that $94 billion lending value comes from loan collateral. The vast majority of those are held at our member banks. And so that is the primary mechanism for members pledging to us is through the QCD function. We do have some assets that are delivered to us with just over 1,000 loans pledged to us via delivery. And then we also have a good chunk of our balance sheet or of our collateral pledged is $15 billion in lending value, and that's over 4,000 securities. So it is a good means to gain liquidity or lending value should you need it. We do have a little bit of cash pledged. It is very minor. But again, that is typically used in just a short-term funding need. Anything to add?
Yeah, and I'd like to point out, I think the cash and CDs, because it's so easy to pledge and then unpledge, that number of 20.2 million can change by the hour, right?
Yeah. So this was a few days ago when we were creating, the presentation, but it could be very different today.
Yeah, even within a couple hours of, so.
I agree with that. So we thought it might be best or help guide us into how we handle the conversation or the rest of the webinar to take a survey and to see how are you guys handling your collateral? Are you pledging all of your eligible collateral that you have available? And some of that is, the survey is going to help guide us. We're going to answer all of the questions, so it doesn't matter the majority or anything like that, but we want to know where to focus and where to spend the most time with all of you today. And some of it, too, is that liquidity needs are so personal to each individual member that it's hard to have a one-size-fits-all approach. I don't think that we do. I think that we do really try to tailor what we can do for each individual member based on their needs. But we're going to try to guide today based on what your answers are here. And we're just interested, honestly. So if you all will do that, I know that Jesse is administering the survey for us, and after everyone has completed the survey will get the results. And then that way it'll help us move forward.
Yeah, and to support, as Kylie mentioned, that there's not a one-size-fits-all. Well, that also applies on the lending side. And when we're developing strategies and helping you manage and navigate through any times, especially the certain times, but whether you're trying to compete against farm credit or decrease your cost of funds, whatever your needs are, our strategies are going to be developed and viable for your situation. And so that communication and dialogue is very important to help you maximize your membership.
Yes. Thank you, Michael.
That's kind of everyone's unique.
I think
we got the polling. I could go on and on about strategies if you find.
All right, we're getting the results now. It takes a little bit to process. So we have a few members who said, I have exhausted all of my collateral. So we're going to talk about that and see how we can help you. One said, I only pledge in single family. I think there's quite a few members who do just that, who only pledge in single family and sort of just stop there. So we'll talk about other asset categories that you might consider. I don't need the additional capacity. So Michael's going to talk to you about why you do and why you should have additional capacity. And then finally, I don't want to. Nobody answered that. So I guess I'm glad that nobody answered. They just don't want to do it. So yeah, that'll help us. Thank you so much for completing the survey. That'll help us at least kind of hone in on some of the things that we can help you with today. So for the first answer that we had, yes, I've exhausted all of my eligible collateral. The one thing that I would say is to always review that schedule of eligible collateral and the underwriting guidelines that we have. First, you want to make sure that you're understanding and interpreting them the same way that we are, right? Tomato, tomato kind of thing. And loans get a little bit tricky because there's so much gray area. And so I would encourage, if there's anything within the underwriting guidelines that maybe is being considered or interpreted differently, that you call and talk with a collateral review officer or myself and we discuss that. I'll give you an example. For participations, and I'm talking specifically about our blanket pledge members who fill out on a QCD form. For participation loans, the assets are eligible if you have sold the participation. So the amount that you've retained, that net portion, is still eligible. And I think a lot of members just look at participations and say, nope, I'm taking them all off. Well, those are some of your biggest credits, and there's often a lot of lending value that's left for the amount that you've retained. So you can pledge retained participations, but sometimes that's not interpreted. And so I just wanted to highlight that as an example. Additionally, we do have some underwriting guideline changes that are coming out. So effective on January 4th with the first quarter QCD, so pledged on March 31, we have allowed interest only in the multifamily and commercial real estate categories. This is very big for us. We used to allow it, I would say probably 10 or 15 years ago, but we stopped, and now we are adding it back in, and we've actually lengthened the amount of the interest only period to 7 years. So we're hoping that provides some of our members with a large portion of their collateral that maybe they weren't able to pledge before, that they now can pledge that. So it's important to stay up on the underwriting guidelines, make sure that you're reading any of those changes that are coming out, and make sure that we're on the same page as far as the interpretation of those guidelines. And then, of course, if you have any questions or concerns about exhausting your collateral, you want to talk to your regional account manager. We're going to say that's a RAM. That's what we call it here. So you want to talk to your RAM, your regional account manager, or someone in financial services. So again, we have a team of people in the collateral review area that can walk you through. And then finally, I did want to highlight, we do have the potential for case-by-case collateral. Typically, that's done on a larger scale. So if you have a certain larger portion of your balance sheet or your assets that you're not able to pledge because of some specific underwriting guidelines, we do have the potential to look at that on a case-by-case basis. Of course, it has to meet our regulations, so there's certain things that we can't take. Inventory and accounts receivable, for example, are something that we're not able to take due to our regulation. So we'll have to evaluate from a regulatory standpoint if it's ineligible, but if there's nothing preventing us from regulation, then we'll have to evaluate if it's something that management can make a decision on in order to provide you some lending value. So there's sometimes pockets of collateral that may meet case-by-case qualifications. And then we also, from a strategy standpoint, in finding additional collateral, Michael's going to go over the collateral capacity analysis that we have. That's a tool that is very beneficial.
Yeah, so many of you have probably seen this, but I think this is a great starting place to show where are your largest categories that you have additional capacity. Now, we run these tools and we're using this tool, and we're using your call report data, so we understand that all that eligible collateral that we're listing in that bottom section might not be eligible collateral. We don't know. We're just comparing it to your call report. But you can see here in this example, you'd start with commercial real estate, right? That is the largest section where you would have, and start there on trying to identify additional collateral. It just gives you a starting place. Now, we're not saying all of that is eligible, but it's still a great tool to start the process of identifying additional collateral. And it'll show the potential collateral, and then we apply the haircuts for each category to give you that number so you can see. This is a great tool. Even if you've identified all of your collateral or whatever, this is still a great tool to have in your documentation for either contingent liquidity plans or to show your regulators. Just a good due diligent and prudent risk management.
Yeah. And if you see those gaps, right, you can either explain it away because you've exhausted all of that and you know that it's ineligible, or maybe you would find something that maybe you hadn't considered before. So, yeah, I think it's a great tool.
Yeah, and so those blue lines, it's hard to tell because it's small, but the blue would be that you'd have potential there.
Right. So in this particular case, it looks like the commercial real estate and the equipment category have a lot of potential.
That's where I was speaking to you. I'd say start in those two, and we'll get back to that here.
Yeah, absolutely. So then the second question, or the second answer, I guess, that we had was, no, I only pledge single-family loans. I know a lot of members who only pledge single-family loans. They don't want to get into other asset categories, and that's fine if what you have is meeting your collateral needs, which Michael's going to talk about a little bit later. But if it's not and you need additional collateral, then we should certainly start to think about branching into other asset categories. So we do have unrestricted versus restricted collateral. Unrestricted is our single-family, whether that's conventional FHA or VA, and also our multifamily collateral. There are no limits to the amount that you can pledge in unrestricted. For restricted collateral types, that includes our commercial real estate, ag real estate, construction, second mortgages on single family, and then for our CFIs, we also have ag operating and equipment collateral. There is a restriction, that's why it's called restricted, on the restricted collateral of 25% of your total assets. So there is a cap that you can pledge, but you can pledge up to that cap. And as we were talking about case by case before, we have several members who need or want to exceed that 25% cap, and so on a case by case basis, we have allowed them to do that. So I don't want you to ever look at some limitation that we have and not ask the question on whether or not we can make any adjustments to suit your needs and what's best for you. And so we just want to make sure that you're optimizing your assets. Also, typically in those restricted asset and even the multifamily category, usually those balances for those assets are a lot higher. And so you may be able to get more bang for your buck if you single out some of those larger loans and identify if they're eligible. Then you may be able to really expand your liquidity and your collateral capacity with just a few loans. So then you always want to make sure that you're reviewing the schedule of eligible collateral to ensure that if you are branching into something new, that the underwriting requirements may be very different than single family. And we always encourage that if there are any questions, or even if you just want to explore something, to reach out to the collateral review team. that an officer there will help you and give you one-on-one guidance and be able to even assist you if you wanted them to look at any documentation or anything like that, then they can walk you through what would be eligible.
I think that's a great opportunity to expand. Is that used frequently, Kylie, or do you think more members could reach out to use that?
I think that it's used. I think typically when they establish a relationship with one of those collateral review officers, typically members start to get very comfortable with them. And so they reach out and say, hey, what about this? Would this work for you? Hey, Susan.
Hello. We have a question.
Oh, good. I love questions.
The question is, how often is the 25% of assets cap calculated? Is it quarterly?
So the 25% is actually, we have a calculation that does it every day because we have obviously rules within our system that sort of track that. But the reality is that for most of our members, their collateral doesn't change every day. And so once they hit that amount, and it's usually done when they submit the QCD form. So as you're filling out the QCD form, you fill in your total assets. And so the restricted collateral would cap out at that 25%.
Thank you. I think that's the only question we have so far.
Yeah, that was a great question. Thank you. So then the next answer that we had was, nope, I don't need the extra capacity. Again, completely understand that. One thing that we do want to encourage is that you consider all of those things. And Michael's certainly going to walk through this probably more than I am, but we are here if you do need the capacity, if you need it quickly. Again, you've got that securities or cash option, and you do want to obviously make sure that you're planning for the future, not just for today.
That's exactly right. I think we learned anything from 2020, anything can happen. And with that surge of deposits, I don't know how quickly it's going to flow out. And you might not need that collateral capacity right now, but in the future, who knows what it can hold. During 2020, again, unprecedented times, anything can happen. So you might need that extra capacity. I'd like to bring up Member Solutions, our area. I think you maybe attended the liquidity webinar we had in, I think it was November 17th. Kevin Parks, Leslie Munster, and Sam Thomas, they've developed a suite of tools that are great to help you with your needs and planning for the future. We're just going to talk about two of them, and we'll have a link at the end so you can go to the website and see all the tools they have available. We've discussed this letter of credit utilization strategy tool. So at the time we developed this, it was liquidity was sparse, right? It wasn't 2020. This is 19. This is 18, and everyone's trying to increase their on-balance sheet liquidity. So we developed this to show how you can utilize the excess collateral, improve your liquidity position, or boost earnings. So if you had obviously right now, many of you are probably not. You have ample liquidity, so not probably necessarily applicable. But on the boosting earnings side, this tool is customizable to allow you to determine if you would want to, say, use the letter of credit and purchase a higher yielding security that is ineligible to be pledged to collateralize the public unit deposits. And then it'll factor in what the letter of credit fee is and give you what that additional earnings are, and those securities would be unpledged, so that would help with your on-balance sheet liquidity. Also, we can include loans. So say you want to deploy some of your capital, you have a choice between, do I use securities, purchase securities with this money, or do I make some loans? Well, we can incorporate that into this tool and show you that if you do make the loans, what additional improvement that will do to your profitability, and then we show the pro forma profitability at the bottom for your return on equity, assets, and net interest margin. And I think that's a key right now because we're going to see a lot of compression, margin compression. So making sure you're available of all the tools that we have to offer, how to use them, and preparing and having the collateral to be able to use those tools when necessary.
Absolutely. So yeah, it's just all about preparation. And so the last question or the last answer, I keep saying question, the last answer that we had was no, I don't want to pledge more collateral. And I'm super happy that there were no answers to that. But we thought just addressing it very briefly, the benefit to pledging additional collateral is it's there when you need it. We've already talked about that. For me and a lot of the collateral side of things is establishing a repeatable and sustainable process. If you build into your quarterly responsibilities, right, because we've all got them, your quarterly reporting, your quarterly responsibilities, if you build into that, okay, I'm going to complete the QCD form and I'm going to evaluate the loans that are eligible, I'm going to look at the securities that I have that are eligible, and you figure out how to do that within your system, it's going to make the pledging process a lot easier long term. And that includes any turnover that you may have, right? Like we all have that one person who does that thing for us. And if they were gone, how would we handle that? And so really establishing a repeatable process for identifying and pledging collateral is super valuable from a long-term perspective. Additionally, it's going to show that you have liquidity to your regulator. And so if you are able to show them, hey, on my QCD form, I've got all of these loans that I could pledge or that I do pledge, then that's going to show them the additional liquidity that you need. And then also to take advantage of opportunities. I know Michael has an example here of an opportunity that you want to make sure you have enough collateral.
Yeah, and this happens in a couple situations. In the past, when we've offered advanced special offerings and someone wanted to participate and they didn't have the capacity, they would hurriedly pledge cash and wait until they could amend their QCD so they could take advantage of that opportunity. Now, there's also opportunities within your organization, say a loan or some investment option is presented and you need that access to liquidity and it's not there. And this option is great. You want to do it, but it just doesn't work and you need to use FHLB to make it happen for the time being. And those are the two common reasons why I think it's very important to make sure you have even above and beyond what you think you might need. And again, Member Solutions and other tools we have will help you figure that out. Counting all your funding sources and incorporating that in your overall strategy as you make your plans going forward. When Kylie mentioned the establish a repeatable and sustainable process, it always reminded me of the Billy Mays, I think it was, that says, set it and forget it. Now, don't forget it, but her point, I think I want to reiterate, is that once you get that process going, we hear repeatedly how easy it is to tag, identify, and submit the QCD. So I just wanted to comment and make sure that if you're not already doing that, once you do that first piece, you set up that process, it really is simple going forward.
Yeah. And as Michael said, 2020 has brought a lot of changes for a lot of us, for everyone. And if anything, I think it's taught us about we have no idea, even the worst case scenario, the worst thing we could think of, we probably haven't thought of it yet, right? And so you don't want to worry about collateral when you need to borrow, really, is ultimately what it comes down to. Hey, Susie, you're back.
Hello. You only see my face when I have a question.
I love it.
I apologize. I have to pull my video back up, and then the question goes away. So let me pull that back up. So we have a couple of questions.
Okay, great.
The first of which is, the question is, do we have any ongoing conversations or dialogue with examiners, state, federal, et cetera, given that sometimes members seem to experience that the on-site examiners don't give them credit for their liquidity with us, and they seem to sometimes dismiss it. So I can help answer that, I think, Kylie, if you would like.
Yeah, go for it.
Okay. Yeah, so we actually do. Kylie, head of Kylie's division, I know specifically, has some conversations with examiners regarding our policies and things. So we do have a dialogue with them. We've had a dialogue with them for years and years. But we are planning to ramp that up a little bit. And so we will definitely keep that in mind as one of the discussion topics that we can talk with them about. So appreciate that input. Appreciate that.
One thing I'd like to add to that, man, I'm really giving some shout outs to Member Solutions, but Kevin Parks published 2 white papers out there on our financial page, and there'll be links at the end. And one of them is more core than core deposits, referring to FHLBank advances. And I won't go into the details, but it's a great read. And I think one of the most, where that question might come from is from a member that maybe doesn't use us frequently. So say you test your line once a year, regulators like that. But I think what they really want to see is that the regular use of FHLBank advances may represent a very well-planned and thoughtful funding and liquidity plan. So that could be a holdup, and that's a conversation to have with that regulator, that you can illustrate that you use advances on a regular basis. So when the time comes and you haven't used them for years, and then all of a sudden you do, well, they might have some questions on whether or not you're implementing the right strategies.
Yeah.
Those papers are a great resource out there on our site, so for sure.
I was trying to summarize.
Yeah. A lot of work and research in those, and they'd be a great tool for you to use with your regulators. Okay, so next question, the second question that I have for you. Can you maybe reiterate how the balance between pledging restricted and unrestricted works, like what we require you to do before you can pledge unrestricted, or before you can pledge restricted, excuse me.
Sure. So there's a prioritization that we would like to maintain, again, between unrestricted and restricted collateral. The word exhaust is in there, and I think that's a little harsh, if I'm being honest. The word exhaust, mostly because unrestricted assets lean more towards our mission, right? They're residential, they're multifamily housing, and so they lean more towards that. And so our preference, our goal, would be for you to exhaust, use lightly, your unrestricted assets prior to moving to your restricted. However, we know that exhaustion of those means that there's oftentimes where there's some collateral that is maybe just not from a reporting standpoint. Again, you want that reward for the effort. You have loans that are less than $25,000, right? Like you're not going to maybe get the effort by going through all of those loans. So we understand that you maybe will only use what you know and have identified as eligible for your unrestricted, and then you can move on to your restricted. You cannot only pledge restricted collateral. You have to pledge something unrestricted. But as long as you've pledged something unrestricted, then you can move to the restricted category. Does that make sense?
I think that makes sense.
Right. To those of us not on mute, it makes sense, right?
Yeah.
Well, I'm glad you clarified that word exhausted always kind of
right.
Like you said, harsh.
Yeah, absolutely. Because if you're not going into restricted because you don't have time or capacity to look at every single loan, that's different than just skipping over it entirely and going directly to, right? So the intent, the spirit behind it is to not skip the unrestricted and go just to, that giant commercial loans that you have, because we want to be mission related, right? We want to be mission positive. but we understand that not every asset that you have that's unrestricted is going to be eligible. So if you've made an effort to identify eligible unrestricted collateral, there's nothing that's stopping you from moving to restricted. Okay. Any other questions pop up while we were there? Nope, she's gone. All right. Okay, getting back to the presentation. Ultimately, I think the message here is don't wait, because you never know what may happen. And so you want to think about maybe any future needs that you may have, not just today. And so now I think Michael's going to talk about why. Why should you want more collateral and how we can help you get there.
Yeah, and I think I'll start with contingent liquidity, because that is a common reason why members aren't using us, or they want to have the dry powder, which is also addressed in some of the white papers. I want to make it clear that if we do not, your capacity with FHLBank Topeka is all about the amount of eligible collateral available to pledge. So unlike other providers or wholesale funding sources, a member's capacity is determined primarily by the availability of eligible collateral, no matter what your financial condition. So I think when things get bad, if you're using us only for contingent liquidity, it's important to know that we're not going to, there might be restrictions or other things that go into place, but you still have access to liquidity. Again, one of our foundations is reliable source of liquidity, tough times and good times. And we've managed that pretty well this year when advanced balances declined and our letter of credit balances increased significantly. Back to the 2020 and the surge of liquidity that the majority of our members have seen come in, I think it's important we don't know when that's going to go out the door. And it's a new environment, and in the last 20, 40 years, things have changed. You have the bank hoppers, it's marginal cost of funds we could get into. It's all sorts. So what's going to happen when those deposits flow out the door and you don't know how much it's going to be, when it's going to be, and you need to quickly utilize advances to meet other cash needs. And so I think that staying invested in using that cash constantly is imperative. And there's many of you attended that staying invested webinar, and there's an article also out on that financial page on how members, even in excess liquidity, times of excess liquidity, they still use the line of credit for their daily cash needs because they could get a higher yield purchasing other assets. The letter of credit tool, we've already pretty much talked on that enough. One thing as you're planning for your future in your funding and liquidity plans is not to limit, constrain yourself to how much you're willing to use us. So for instance, I worked with a member and their policy said we will only use FHLBank Topeka for 10% of our total assets, right? Well, we have an advanced asset discount on advances greater than 12 months if you have borrowed, if your advanced asset ratio is greater than 10%. So that's a significant amount in this environment when rates are low. I think the biggest one is the stock benefit, right? Because you have to get over that A stock hurdle, that membership stock, to really get into that higher paying Class B stock. Last quarter, we paid 5.25% on Class B dividend stock, and Class A was 0.25%. So once you get over that hurdle, that impact is huge. And that's a nice way to generate a little bit of extra income for using us, and that also helps your community and us contribute through affordable housing programs, CHC, CDP advances, and other housing initiatives we have. And I think, again, to reiterate, regularly using us, I think will represent a very well planned and thoughtful funding and liquidity strategy. So when the time comes, if you only want to use this for contingent, then you can validate that I know how to use advances. I know what tools I have in my tool belt and how to use them. So I guess that the number one thing I want to get across today is to contact us. Contact your regional account manager, Collateral, me, the lending desk, anyone to help us help you maximize your membership. Because if you don't understand the tools available to you, then you might be missing out on an opportunity, especially as margins are being compressed.
Excellent. Good job, Mike.
Good job.
Okay. Just sort of coming back around to the collateral piece of this, where to find collateral information. Certainly our member products and services guide is the main location for you to find that information. Specifically, collateral guidelines start on page 68. It talks about our collateral processes and requirements that we have. And then we get into specific guidelines through the schedule of eligible collateral. So that's sort of the meat of it, if you will. And then the underwriting requirements, we do start those on page 80, and that is the specific guidelines for each asset category. We do have a collateral landing page that I would encourage you to visit. It does provide you a lot of resources, a lot of information about collateral. We are going to talk in a moment about the collateral webinars that we do every year. So those are recorded and put out there. So there's a lot of collateral information. When we ask, very few members even know that we have a collateral website. And so I would encourage you, if you've not been out there, to just head out there, take a peek around, take a look at the additional information that we have available for you. And then as far as educational opportunities, concludes our Advance Your Thinking series. So the collateral piece was the very last one. But we have recorded all of the previous webinars, and they are available. The link is there for you. And then the regional meeting we will hold through August through October of next year. And the collateral webinar series will be annually in the fall. Okay, so now, oh good, the timing's really good. Now we'll open it up for Q&A. If you guys have any questions or anything that we can clarify for you. Susan, have you gotten any?
We have not gotten any yet.
Dang it.
See if any.
That's my favorite part.
I know, but we have some good ones so far already.
I asked you enough.
Yeah, those have been good. What did you say, Michael? I'm sorry.
Did I ask you enough questions every day? We banter quite a bit.
Yeah.
I try to think, why are we doing it this way, or why is this? And it all comes back to our mission.
Right.
And the foundation of our strong performance. So.
Okay.
Give everybody another maybe 30 seconds or so to see
Don't
if
be
they
shy. I swear I'm
have
super
any.
nice.
She is. Verified. Verified.
And if you don't feel comfortable asking it here, certainly reach out individually and we'll go over anything you need.
Mm-hmm.
And please use the resources available. I'll say it 15 times. Reach out, contact any of us. We just want to make sure you're getting the most out of your membership.
Yep.
Yeah.
Well, I don't see any. So.
You don't have any? Okay.
Yeah.
That's all right.
Apparently.
I'm going to bring it up. I thought for certain we'd get like an e-notes or something.
That's right.
But we'll move on.
Well,
okay. So there we are again. Please, first and foremost, reach out to Michael and I if you have any questions about this presentation or if we can help you at all. We're fairly resourceful, so if I can't answer the question, I will find somebody who can. Certainly our lending staff is available to provide you with guidance and help anytime you may need it. The collateral review staff is also here and available to answer any collateral-related questions, eligibility, anything like that. Certainly reach out there. And then we did talk about the collateral landing page, and then Michael talked about the member solutions, and they also have a landing page where you can go and get some of those tools that we've identified, not just today, but in other webinars that we've done in this series. So we would encourage you to go out and explore that and see if there's any opportunities for you there to use those tools and put them in your tool belt, as Michael said.
Yeah, and when you visit that site, you'll understand why we didn't go through every single tool. They're all great.
Because, yes, we're hitting that 45-minute mark, which is great, but we would have been here for like 3 hours going.
Yeah.
And then the Member Products and Services Guide, again, just sort of a blanket good resource for you, A to Z, all of the things that are Home Loan Bank related.
And then I guess I misspoke earlier. We didn't include the financial intelligence page, but it's just out on our public site. Easy to navigate, and that's where you can find those white papers I discussed. And Jeff Steiner, the Kansas Regional Account Manager, wrote up a nice staying invested strategy.
Yeah.
It's nice and short. I highly suggest reading those. They're unbiased.
Okay, I'll check one more time just to see if we got any questions. Nope, doesn't look like we did. So,
okay.
Well, thank you, everybody, for joining us. Thanks, Kylie and Michael, for sharing the information. And as they said, please reach out. We're great at answering questions. It's what most of us specialize in. So, and we love to hear from you. So if you have follow-up questions, don't be shy. So thank you again. Yeah.
Thank you. Thanks for spending an hour with us today. Happy holidays, everybody.
Thank you.
Have a great afternoon. Thanks.
Bye.